Hi everybody, this is Gary Dean and this is our nightly video report for Thursday, February 25th, 2016. So in the morning notes I put that, there's a chance we could see the S&P up 20 points because that's typically how, these rallies and drops have been ending. It's been in a big ramp or capitulation drop, and then it reverses. And sure enough, the S&P closed up 21 points. It was really acting kind of weak, and I wanted to start building a position, and I only took a third of a position instead of the typical half. And the reason was, I could have built a compelling reason on why we were going to head down, or just as compelling as we were going to head up. So instead of doing the 50%, I just wanted some skin in the game. I would have liked to have held off and bought those towards the end of the day, but it is what it is, and that's why I only took a third of a position. So even being, obviously getting in early today because we rallied up, we're down $160. Nothing, earth-shattering at all. And that's really the reason why I did a third. So I'm going to wait because there's a shot that we could still head up. I want to see what tomorrow brings, but we want to continue with this strength to layer in the positions. And, I do believe from these levels that the larger move is most likely coming to the downside. So first thing, this is our money flow. And the S&P in the number one spot as far as selling the rally. And you can see the money flow was minus 175. Block trades minus 95. So there was selling going on even though the S&P was higher. And that is not a concrete buy or sell. It's just a warning sign that, things aren't as rosy when you lift up the hood as they appear to be. So let's go to a daily chart. They made it above the moving average. We are still at some resistance right here. If they pop up, which, I'm going to say that there's a chance that we could see them pop up to the 1962 area. This will bring, our momentum into the mid-range there. But still, once this completes, I'm still looking for some type of wave C to the downside. So here is the 60-minute chart. We are above these. You can see we have bearish divergences in place. They may be forming a second set of them because remember, this was a bearish divergence here. This looks like it's, pretty good spike higher. So we may get a down and up, and then we form a secondary bearish divergence. And like I said, once this completes, I'm still looking for these lows to be taken out, and there's a good chance that these lows are going to be taken out. But you just want to be a little bit patient with, and not dive all in on the short side on it because momentum is on the bull side. So 1962 is a fib retracement level. Just above that, we have the 1985 area, which is resistance. We still have plenty of gaps underneath it that need to be filled, but there's also a gap up here that needs to be filled. I don't believe they're going to be able to do this in one shot. That's why I believe that we're going to be coming down, especially because of this pattern, which is a megaphone top that is traded, that's forming at still the lower end of the chart. But from this move, this is now a megaphone top where you can see we had a lower low, higher high, and that's it. So this is suggesting that we could see a move to the 1970. So like I said, there's a chance it may get there. This is when I start getting a little more aggressive on the short side, and maybe I go to my other 2/3 up here, which will have us averaged in, not too far from this level here. And like I said, it's still, I believe these lows are going to be taken out, but we just want to be careful as far as, just jumping all in. So anyway, this is a bearish pattern, pretty overextended on the SMI, and we do have bearish divergences, but they may have to make another set of them. 15-minute chart, bearish divergences, overbought. Bulls held this support area, And the thing is this pattern right here now looks like some kind of bearish wedge, which you'll see on the 5-minute chart. But you can see we're having sell signals already on the 15-minute chart, and in all reality, this is a bearish divergence on the 60. So I think really the first objective of the bears, they got to get it through this 1920, 1918 area. If that happens, then we'll probably see a quick drop down to the 1897, and momentum would pick up when they get below the 1890. But first job, they need to get it through the 1920 area. 5-minute chart, bearish divergences again. So even though they crawled this higher and caused some shorts to cover, we had bearish divergences the entire day. This here is a bearish wedge. Would really not be too interested in joining in on the bullish rally here. I think once this wedge breaks, we are going to get a very typical, similar type move as we saw here. So I'm leaving the door open that they may try to push us higher tomorrow. I still have 2/3 of a position that I need to fill. I'm going to be kind of patient with it, but I think within the next 1 to 2 trading days, we're going to see momentum switch to the downside. So with that, have a great night, and I'll talk to you guys tomorrow.